Hello, everybody. It is 9:20 on Wednesday. We had reason to change over to YouTube again. So you are with us live on YouTube, and I know some of you are viewing us on Facebook, and some of you are just seeing us on LinkedIn. Hello, everybody. So thank you for everybody. It is 9:20. Can you hear us? On Wednesday, we had some.
Mute your
YouTube again. So you are
mute your computer.
Yeah, I got to do it. Some of you are viewing Facebook, and some. All right, can you still hear me?
Yeah, you're good. Yeah.
Okay, cool. So with that being said, Leon, tell me what we're talking about today.
So today, kind of want to cover, so Brent and I are getting a lot of questions from people regarding this crash, right? Should they buy in? Should they sell? What should they do currently? We give our picks at the end, which is kind of our opinion on certain stocks in this environment. But I want to step back and give a 6,000-foot view of what crashes are and what they've done in the past. So Brent, if you could pull up that slide.
Yep. No, if you can just give them a quick overview of what they're going to see on the slide while I do this.
Yeah. So the slide is gonna show 150 years. So it's going back. It's the S&P 500 going back 150 years, and had you invested $1 in the market back in 1870. And it's going to show, what that dollar has grown to up through roughly this year, 2020. But the main thing I want to show is past crashes. Really, when you think about things in time, this crash isn't really that bad. And past crashes, what this slide will show is that past crashes always recover, right? So here it is. So here's a perspective. So if you look to at the far left, 1870 through the far right, 2020, and what you're seeing is it's showing you through time all the major down moves in the market. I'm not even really familiar with the outbreak of the World War. For me, I really just look from World War I, which is around 1918 forward. So if you look at where it says World War I and influenza, right? The market there took a serious dive. And the thing is when markets take serious dives, people are always like it's the end of the world. It's going to zero. Nothing's going to recover. Yada yada yada. And what this shows that during the World War I and influenza, the market took a dive, and then after about 10 years, slowly came back and made a new high. The next crisis was, of course, the Great Depression, 1929. Took a serious sharp dive, just like the one we're in now. Kind of teetered around a while. That went for about 10 years as well, and then made another high. Then you had
actually, Leon, real quick, during 1929, that was the peak of the bull market. So I think the Dow might have been at like 300 or some points back then. So
right, yeah, relative, yeah. You're looking back, yeah.
Yeah,
it was way lower than it is now.
Yeah, but it was considered a bull market at the end of that.
Yeah, right. So yeah, that was that. I mean, if you look at the chart from the World War I influenza up to the Great Depression, you see that huge spike where the market was in a serious bull run for about another 10 years. And then we hit the beginning of the Great Depression, where then it collapsed, took a serious dive, kind of came back to right where it was before, then took another dive, teetered around for another couple of years, then took off to new highs. So what this shows,
I'm gonna jump in and out while you're doing this. So also that was around 1933. It was around the time where gold wasn't backed by the gold standard had changed. So that was also when the U.S. was kind of determining what is the new gold standard.
Right. Yep. Okay. Mm-hmm. And then so after the World War II Great Depression, you had the post-war bear market, as you see, again, another dip. The market kind of teeters around for a while, then takes off. And then you see from there, we took off that was what, 1950 to about 1970. So almost like a 20-year bull run. But in that, you see, we had the height of the Cuban Missile Crisis, as well as the Vietnam War and Watergate.
And President Kennedy's assassination.
Yeah, Kennedy's assassination. Yep. And but in that serious bull run that you see there were small dips, but again, the market came back. Then we come into the inflationary bear market, which is also the beginning of Watergate. The market took a big dip right around 1975, 1980, went for about 5 years, took off again. Now we're moving into the mid 80s now. Black Monday, for people who don't know, is 1987. And that was prior to recent crash we had. That was the biggest single day crash in the history of the market. That was they call it Black Monday because, I mean, people got absolutely wiped out, decimated with Black Monday. And the interesting thing about that is, so before Black Monday, there actually were no options to trade on stocks, and I don't think indexes were even out back then. At least not for the average investor. But options became well, they started in the 70s. They didn't really become popular till 1987, because what people realized was, like, you know, when these crashes happen, if you're just long without any way to hedge your position on the short side, people got killed. And that's what happened. People got decimated in that drop. So put options became very, very popular after 1987, and the option market in general kind of took off after that. Then after 1987, Black Monday, you see, we went for another, you know, I don't know, another 10 years, 1990. Now we're talking about the dot-com.
Yeah, again, jump back in. When you talk about Black Monday, you got to think about this being a time where I think 4 times in history beyond this, the market had actually stopped trading just because essentially governments didn't know how to handle it. So
right. Yeah, I think 87 they stopped the market too, because again, that drop no one saw coming. I mean, it just came out of absolutely nowhere, wiped out everybody. I think the market paused for maybe I don't know if it was for that day or just for a few hours. But I think circuit breakers. What circuit breakers are is when they actually stop the market because the market has tanked or shot up too much. And I don't know if circuit breakers were around before 87. They either started after 87 or became popular after 87, just like options. But either way, in modern times, the 87 crash that happened, which again was the biggest in modern day eras, where options and I believe circuit breakers became really, really popular. So then after Black Monday, we move now into
real quick, for anybody who doesn't know what circuit breakers are, there's certain safeguards that are put into the market, and these safeguards really stop any drastic swing either way. And so sometimes you think they're there to protect the consumers, sometimes they're actually there to protect the businesses. And so, you know, when you think about what is the safeguards, the government put these regulations in place to protect me, the little guy. No, they didn't. If all of a sudden there's a panic in the US, everybody pulls their money out and the market starts to accelerate through the floor, then all of a sudden these companies that normally depended on that funds to actually run their businesses, they disappear. So it's not always to protect the little guy.
I mean, it does protect us too. It does protect us too, because again, as the market is absolutely tanking, the circuit breakers will come in and stop the market. Now, I don't know if any of y'all paid attention as close as Brent and I did, but during the crash last month, circuit breakers were kicked in, I think 2 or 3 times. So what happens is, I remember the market would open at 9:30. Literally, the market would be down 15% in like 5 minutes, and the market would come in, the circuit breaker would hit, and the market would stop. It would stop trading for I think like an hour or so. After an hour, the market
stopped it. It happened on 9/11 too. A lot of people might have remember that as the most. I think 9/11 was the time that the world realized that was a thing.
Oh yeah, were a thing. Yep. So then they during this crash, they come in, they stop trading. I think it's like for an hour. Then after an hour, they kind of slowly let the market bleed back in. Now the crazy thing is that circuit breakers don't always work, right? So during this crash, when the circuit breakers came in, they stopped the market from trading. It came back, I think after an hour, the market still went lower. So they're not perfect. You know, they want people to kind of take a step back and think about what they're doing, think about their trades. Sometimes you see a bit of a bump up, and then the market would turn over if it's really bad, which is what happened during the crash last month. So you know, they're there. They work until they don't, like most things. So back to the chart, Black Monday happened, which was the 1987 crash, the worst up to that point. After that, we had so it was 87 that moved into the 90s. We had the dot-com boom, and then 2000.
Actually, don't forget 93. There was a dip too. It was the Gulf War. At the time,
yeah, that's true. Yeah, yep.
It was a big dip. I mean, it was one of the bigger dips that people realized what was happening in the market was directly related to the war.
You look on you can kind of see right after 1990, there's a bit of that dip. And that's probably the Gulf War drop. The dot-com boom really started about 1993, 1995, and went through 2000. So in the early 2000s, 2 things happened. We had first a dot-com bust, and then of course 9/11. And you see that, the first dip there right around 2000, things started kind of come back. In there was also the 9/11 stuff. And then of course the big drop that we see most recently there was the credit crisis, the Great Recession in 2008, 2009. So what this is meant to show you all is to give some perspective on big drops. They do happen. They're very painful. But remember, this is 150 years of data. This isn't like 2 or 3 years. This is going back 150 years. What this shows you is that when drops happen and crashes happen, they hurt, they're painful, they suck, but ultimately they're resolved because remember, the market is a forward-looking mechanism, and it's all based on what the economy is going to do generally. Of course, it's based on an individual stock, but stocks make up the economy. And once things happen that cause a drop, things that cause a drop to happen resolve themselves, the market then digests that. We kind of get a sideways motion, and then we kind of move back up. So I just want to show this to show everyone that drops are normal. I mean, crashes are normal. They happen. They're actually good for the market because something can't go up forever. There has to be profit taking. There has to be other ways for people to enter at lower prices. So drops and crashes are good for the market. The speed of them does suck. I mean, this one we had recently was the fastest drop in the history of the Dow, in the history of the market. So that's how big this one was. But again,
Leon, when you talk about the forward-facing stance of the market, you got to think most day-to-day average Joe investors are rear-view mirror investors, right? So they're looking at everything that has happened, and then they're trying to make a decision based off the past, when the market is always looking forward. Right. So oftentimes there's a natural conflict between how you investors, especially some of the newer investors who are with us, even some of the seasoned investors, mentally, they go to a default of, oh my gosh, I'm looking at everything that just happened and trying to figure out. But experience shows them stay the course, continue if you have stop loss orders. And it's also when you start looking at how you invest in your strategies. Do you put stops and do you put mechanisms in place to take the emotion out of investing? Because if you don't, that emotion kicks in, all these losses, all these heights. At one point, they were talking about, basically burning down Wall Street, and then you have when the, I think it was the Depression happened, the banks just put gates up around themselves, trying to protect them from people who were trying to get in and just take their money out. So these things create very serious emotions in us. And when we try to invest, we look at what's possible. We're not looking forward. And the reason Leon and I are talking to you all at length about this today is because we want you to have a forward-facing vision for where the market is going to go, especially right now.
Right. And also looking at, like I said, like Brent said, looking forward. But what this is also showing you is that history is always a guide. We all know that saying, history is a guide. What this shows that during after every drop, and this is only 150 years, there's more data. I mean, the market goes back, I think, into the 1700s. So there's more data, again, that shows the same thing. You have these huge drops, you have kind of a sideways movement, and then you have the market, takes off to new highs. Because again, unless you think the U.S. economy is going to go to zero and we're all essentially going to die, the market's going to come back because the U.S. economy is going to come back. It may come back slow, it may be painful, it may be harsh, but it's going to come back. And the same thing we're going through right now. One last thing I want to say about this is what this also shows. So people always say, invest for the long term, and that's taking into account time, right? But when most people say invest for the long term, they're usually thinking like your retirement account, and which is fine, which is everyone has to have that. But I know generally a lot of people on here and Brent and ourselves. I mean, we're long-term investors. We're not really traders, but we do take profits on certain positions. But what I'm saying about time is what I would like everyone to do is once you do your analysis and you kind of go through, whatever you decide on to invest in a stock, at the very end, add a component of time. And what I mean by that is say to yourself, I'm gonna hold this stock for at least 3 years, for at least 5 years. And not say not look at it, but when you do get in and you do say that you're down 5-10% after you get in, you've already told yourself you're going to stay in the stock 3 years. So ignore the drops, ignore the volatility, and just ride up. Because again, what this shows you is that had people think about the drop that happened to us recently. If people that we dropped 34% in 20 days, people that sold near the bottoms right now are kicking themselves because we're 20% off the lows. People that sold even in the middle of the drop are kicking themselves because again, they're at a loss. So what this shows you is that time is on your side. Time is your friend. Just let time go by. Add a time component to your investing where you add, you tell yourself, okay, I'm getting a stock. I'm gonna hold it for minimum 3 years, minimum 5 years, minimum 10 years. And you'll see 9 times out of 10, the results will be positive versus, as Brent said, emotion, where you panic, you get in the stock, after 6 months, you're down 5%. You figure, oh, this is crap. Let me get out of this. Then you look back 2 years, year and a half later, and you would have made 30% had you stayed in it.
Yeah.
So
a lot of that happens because you didn't do research, or you had no understanding what you were investing in. You did it because a friend told you, or you did it because you heard a news article, and you have no basis to root like security in. And so when the market moves, sways in any direction, and it's always gonna sway. As you can see, it can sway. You're like, okay, I'm gonna sway with the market. And that's not what you want to do. You want to watch the sway and then say, you know what, I haven't hit my mark yet. And that can also happen having percentage moves or dollar targets, depending on how you invest, that you're going for. I think Leon definitely has a great strategy for the person who's just getting into the market and they're like, you know what, let me set some time period. And it becomes your safety bubble, right? So now you're in this bubble, you're like, I don't worry about what's happening day to day. I'm not checking the market. But for those of you all who are more advanced investors, this is when we get into stop loss orders, or if you want to have some type of percentage move trigger on your trades that will allow you to take profits if that's what you want to do. But at least you don't have to watch it with the same anxiety. And before we get off of the chart, I did want to say, Leon, I pulled up a chart. This is a chart I had from years ago when I was an agent still. And hold on 1 second and get back to us. Okay. So this is a chart I had years ago when I was an agent. And so this chart is very similar to one we just showed you, but it actually takes $1 in 1925, and then it shows what that dollar would have been in 2004. So this is the $1 right here. This is the year 2004. I've kept this chart since 2004, in case you all are wondering why I have it. I always thought it was interesting. So this includes the bottom of the crash, Dow Jones going to $41 from 400 plus, going to 41 points. Then you have gold standard dropping, Pearl Harbor, U.S. Treasury almost folding at one point, the Bay of Pigs, Cuban Missile Crisis, all these things, all these are included in this. So if you would have took $1 and put it in the bank, you would have $11 from 1925 to 2004. If you would have took that dollar and put it into a treasury bill, you would have had $18 from 1925 to 2004. If you would have took that same dollar and put it into a long-term government bond, which many people I've heard, oh, liquidate your account, just put it in bonds and let it ride because the market's too volatile. Okay, for all of you all who are watching this, if you would have done that during that period, 1925, 2004, $66. So I do this all the time. I'm gonna give a pregnant pause. I would love for you all in comments, or if we were live, I would say in the comments, tell me what you think $1 would be value-wise if you would have put it in a large cap stock. But I can't, so I'm just gonna tell you the answer. 1925 to 2004, $1, same $1 we've been talking about, $2,533. $2,533. If you were in a bank account, $11. Okay, government bond people, $66. So now let's go to the small caps. We're talking small caps now. If you were to put your money in a small cap fund, $1, experience all this volatility. Now look right here. Let me get very close. That's where small caps work. Can you imagine thinking, oh my gosh, look at these bank people. I should be up here. These small cap, they're idiots. Like, why would they stay here? They stay the course. They don't worry about the market. 2004, we're talking about $12,988. So let me say that again, $12,988.
Versus how much if they put it in the bank?
Is it $11?
$11, right? Okay. So
but right here, oh, you're dancing. You think you won.
Mm-hmm.
You're looking at all your friends, and Leon and I have experienced this. So when we had that chart up, you got to think Leon and I came into the market in 1993. So that was right 92, 93.
I think the Gulf War was around that time. Yeah,
it was right around the Gulf War, but it was that was also like right before the .com failure. It wasn't that long after, like, going into it, but it was in an era where people were like, oh, dancing on cars, everything's good. And then all of a sudden, you're like, what just happened? Dow Jones is not my friend anymore. And we stayed the course.
Mhm.
We were still trading during this time period. So I say that to say we have experience in these markets. It's not something we're guessing on. It's not something we just read about. We're not hearing stories from friends. We were invested during the booms, and we've been invested during the crashes. Actually, I was a ticket trader. Like, I wrote tickets when 9/11 happened, and we had to call in to the towers to see if our remote facility was still operational because the towers were hit. I mean, like, I really remember that day because I was writing the tickets and our remote office was in the towers. So, you know, we've lived this not only professionally, but personally. Many of you all who are panicking, we're bringing you this information. And the reason why we created Investing in Education Academies, you need people like this. You need people like us, I'm gonna be honest, who, number one, understand just personally what it feels like, but then technically we've studied it too. And so, I mean, I know I interrupted you, Lee. And Vincent Brown, we're going to get to your question that you posted in the Investing in Education Academy Facebook group. We're absolutely going to answer that question today, or at least address it. But Leon, you were going somewhere further with your thought.
Nah, I mean, yeah, you covered it all. I mean, so I mean, like what Brent just showed essentially is that it's time. Like I kind of brought it back to what my original point is, that time is on your side. Time is your friend. And I'm actually going to do a piece later on down the line that I'm going to show why time is on your side, actually from a data perspective, and from actual facts that shows why time actually works with investments versus just like, oh, I mean, both chart we showed shows that it's factual. The longer you stay in something, the better chance of success. But I'm actually going to show the data behind why it actually works at a future time.
Yeah.
And Vince, Beyond Meat, we're gonna cover that in a minute.
Yeah. So for you all in summary who have just tuned in, who have been staying with us, I also wanted to say thank you so much, because this is 1 month of us doing this right now. And so with it being 1 month in, we have experienced about 4,000 plus views to our video, written content. You all have been sending us text. Again, we're getting closer to the actual online courses, the membership platforms being open. That's actually what you see in the background. So IEA, Investing Education Academy, we will have our online courses, our live community. You can find us in Facebook and also LinkedIn for the communities, our free communities. And then we have a membership platform that's coming out, and people have access to speak at different events for their organizations and so forth. So thank you for all of that. And, you know, Leon, did you want to give them the stats on some of our picks up until now?
You mean as far as like the numbers?
Rough, like just the aggregate of some of our selections.
You mean as far as our returns?
Yeah.
Yeah. So so the pick. So what Brent and I do, we're gonna do like we're gonna give like an update on our picks. More deep dive a little later. But for now, as of right now, last I checked, we were up about 10% on our pick in aggregate. That's between Brent and I. So what we're doing is we're breaking that into, we have my picks, we have Brent picks, and we have an aggregate. In aggregate, our numbers we're at about 10%. Some of our picks are up 15, 20%. And some are up less, and one or two are down. That's kind of we have the average. But we're average right now. Our picks, since we've been picking the last month, we're up about 10% between the both of us.
And so if somebody had invested 100,000 in every pick we've chosen up until now, they would be sitting on 10,000 extra dollars. Now, we say this, always do your research. You know, like some picks are up, some picks are negative. So that's just that's the way the market is. But we're trying to go for transparency. And like we said, as we move, especially towards the membership platform, we are going to actually show you all the brokerage account that we opened. We've had a lot of interest, some people coming in and wanting immediate access to the membership. But today, we just wanted to let you all know what's happening in the marketplace is actually normal. And so,
and good. Prices were extended. They needed to come down. This is actually a good thing.
It's a correction. And so when the market actually corrects like this, there are some things that, you know, go from unattainable to value stocks. And so are you really looking at where the valuations are, and are you investing accordingly? Or are you waiting on the sideline? And one word that we should have said, or one term we should have mentioned during this whole thing is market timing. And people are trying to play the role of market timers when they have no experience in that space.
Mm-hmm.
And if you were to miss 10 of the most accelerated data, and actually, I'm gonna try to pull this chart back up real quick. So if I'm gonna grab the mouse, if it's right around here is a 10-year period. So these are probably representative of if you were to miss one of these days in this, maybe actually it's probably about 4-year period from World War II and influenza to the market crash, Great Depression. 10 of those days, with you trying to time the market, you could have ended up here.
Right.
Easily. But if you ended up here and you're trying to time the market, you might have missed this run.
Mm-hmm.
And so if you were to miss 10 days from here, it could have been here, it could have been down here. It could be any of these runs right here. As you can see, it's a number of runs. It's equivalent to missing between 6 and 11 years in the market in regards to the compounding effects of your money. So when you're trying to wait 2 or 3 days because you're trying to time $4 or $20, just think about what you could be losing potentially in the long run. And that stock could be hundreds, it could be thousands. Leon and I had a phone call with the individual last night. And it just so happens that we had given advice to this young man years ago, conversationally. And he was like, it was the #1 best thing he's done in the market since he's had his account. And we haven't talked to this kid in over maybe 6 years. He bought Amazon, and he told us, what was the price?
$500.
I don't think it was 500, dude. I think it was.
No, it was no. He said it was 500. Yeah.
Let me see. I think 500 is the price I bought Google at.
No, he said 5. I remember.
Okay.
I remember thinking, wow, like it was the mid-hundreds, and then now it's like double to triple since then.
Yeah. So you talk about a casual conversation that led this individual to having a stock that's triple. And he just held it. You know, he's not an investor. He was a student in school. And we just happened to be talking to him. It wasn't like we were even talking about investing. And he just thanked us during the conversation, saying it was one of the best things that's ever happened. We are hoping you all have that experience now, and 6 years into what this is going to develop into, I hope, a very strong company. We're having that conversation on a yacht. And so,
or some sort of getaway. Yeah. Once we can all get out the basement soon.
Yeah, once we get off quarantine, you know. So just think about what you're doing right now. Be very particular about how you invest, but also do your research when you listen to these lives. We're really excited that you all get excited from this. And Vincent, we're about to get to you like right after this. But do your due diligence and invest in a manner that you feel comfortable using. What kind of cash, Leon?
Risk capital. Capital you can money you can lose. Not feeding your family with, not sending your kid to college. Money that if you lost tomorrow, you'd still be able to have food on the table. So only use risk capital. And like Brent said, do your research. I mean, the stuff we talk about on here, this stuff that we've researched on our own, stuff that we believe in. And it's kind of like the discussion we had in the private Facebook group regarding Warren Buffett's selling of airlines. A lot of people had questions about that. And I just made the point, that fit his risk profile, right? That fit his investing thesis, right? Doesn't fit mine. Like I'm good. I actually bought more the day after he sold. I think airlines dropped about 10%. I went in and bought more. For all the reasons that I laid out, one in the comments and two in the post that I had about why airlines kind of dominated our recent picks. You can go back and read that. We're not gonna cover that now. But yeah, just do your research. Don't blindly follow Warren Buffett just because he sold airlines to think, oh, it's now the time to get out. No, that's actually a buying opportunity to buy airlines at a much discounted price.
Okay. I'm sorry, Lee. You know how we are. I had to look it up. Amazon was trading at $250 a share 6 years ago.
Okay. So it was.
I think you were thinking about me and Google.
Okay. All right. So even it's even better than he got at a better price.
You know what though? The thing, I hope you all read that article, and Leon wrote that article about Warren Buffett, and realize Warren Buffett's net worth, and also where he is in his career. So it's not that we're discounting Warren Buffett. It's not our intent. Warren, if you watch this, We love you. But it's not to think that, okay, now I'm going to blindly follow him either. The same way we're telling you all not to blindly follow us. You don't blindly follow Warren Buffett because he's Warren Buffett now. It's a great model to go after. I watched Berkshire Hathaway since college, but I bought more too. And I waited for what's called the Buffett effect. And if any of y'all know Warren Buffett, you know he has a Buffett effect. I wanted the news to really hit and land and watch the market go down even further before I bought more. I bought more American. What'd you buy, Leon? I bought American.
I bought more Delta.
Okay. I think Delta's a winner. Like Delta's actually taking a very strong position in the market in regards to having a real plan for how they're going to reinvent themselves during this time period. So hats off to Delta. Beyond Meat. Vincent Brown sent us in a message, as we all told everyone, if you send us a request, we will do our best to get not only the information, but get it to you all. I'll give you my take first because it's going to be more qualitative. Beyond Meat right now, what's happening is the question was, what is the thought about Beyond Meat now that we're facing the fact that there may be a meat shortage? I think the meat shortage is going to be short-lived. Personally, it's all personal. But Beyond Meat is starting to get a lot of attention because it is an alternative that people are looking at. But there's a lot of competition coming to the marketplace as it relates to meat alternatives. And so with that, also from a healthy standpoint, a lot of people are just going straight vegan. And so I think Beyond Meat is an all right play. I think there are better choices out there. I wouldn't be, as they say, chomping at the bits to buy it. I don't even know the stock price, so Leon's going to go into that part. But just as a company, I like what the company is doing, and I like their aggression in attaining market share. I do, but I don't think that they're going to be like the winner in this space, personally.
Yeah. So from my perspective, so I'll just give you some numbers. So today they reported net income was 1.8 million. That's versus a 6.6 million loss last year. So they blew it out the water. Revenue was up 141%, $97 million in revenue versus $40 million in revenue last year. So they're looking good. I mean, if you're looking at it strictly as kind of a growth play, they're a great play. I'm kind of with Brent. The competition is going to be massive once we kind of get through this whole Corona thing. Tyson Foods is really putting a lot of money behind their alternative. Impossible Foods, I think recently signed a deal. They're doing, I think Impossible is doing more restaurants, and Beyond is trying to get more into groceries. But either way, there's going to be a massive amount of competition. I actually saw the CEO today on CNBC. He said, he was frank. He was like, look, during this crisis, our goal is to take market share. They're trying to get in anywhere they can right now, which is smart from a business perspective. Yeah. But there will be a lot of competition. Right now, their numbers look good. And I think they'll be one of the winners. But as Brent said, I think they're better plays than Beyond Meat right now on a long-term basis. Again, we're not traders. Yeah. So if you're looking to flip this, maybe. But for me, I would put my money elsewhere. I would do a very small position in this. I wouldn't. It's not something I'd be looking at now. But as far as a momentum play, yeah, it's if you're playing that game, it's one to look at.
Yeah, and that goes to like the first mover advantage, right? So they're an established brand, and they start really. I'm not even going to like the composition of their burgers, but like they did a lot with beets. I'm just gonna say that. And in the space, I looked at them a while back, like this is a good investment. And what's going to happen is that as we look at meat alternatives, a huge issue for all of them, again, qualitatively speaking, is the sodium content levels. And Beyond Meat has not conquered the sodium content issue. And for a lot of people who were, meat eaters, Beyond Meat actually has a higher sodium level than most natural meats. So for those who who are the grillers, who are the people who are eating a lot of burgers, it actually health-wise hasn't made sense. And I think when the market catches up to what that means, the alternatives who are like Impossible Burger is really looking at the nutritional value of their alternative meats. And so for that reason, I think it is going to catch up to them. Again, personal opinion.
Right. So I agree. Like I said, it's not for me, not right now. But like I said, it's a momentum play, and even a long-term play. I mean, alternative meat is going to be a thing in the future. I mean, all these millennials, they're really into saving the planet and eating alternative meat and being vegan.
Saving the planet. We want to save the planet.
No, I mean, we haven't acted on it, but like that. Millennials are acting on it now. So I mean, it's a play. I just like Brent said, I just think for me, they're better alternatives right now. But as of right now, what they report, the numbers look great.
Yeah. And so that's going to lead us into what we do every week. We give you our 2 choices. Now, I'm almost tempted to tell them what happened when we did our selection, but that would be against what we're doing. What do you want to do? I'll let you make the call.
I mean, yeah. So we were, we kind of go through our analysis and do our picks. Yeah. And right before we came on, we both realized that we almost picked the same company, which was Visa. Yeah. But we actually both. Did you pick Visa?
I ended up picking Facebook.
Yeah, Brent picked Visa. Visa was one of my choices. I ended up picking. So I'll just say my pick is Accenture, stock symbol ACN. It closed today at $180. Some numbers on it. 2-year profit growth rate is about 10%. 2-year sales growth rate is about 7%. So those are solid. The most recent news on it, they just landed a $96 million contract with the VA department to update their systems and modernize their computer systems. And if you're not sure what Accenture does, they're a global IT firm. I think they're out of Bermuda. Their headquarters there, but they're all over the world. I mean, I used to work for them, so I worked for them for 7 years. In my project, I was on the team that handled the Postal Service's website back in the early 2012, 13. So I work for them firsthand. I know they're a solid company. Their numbers are solid. So my pick is Accenture ACN.
Yeah, and so I think it's incredible. Out of all the stocks that are in existence, and Leon and I aren't the same type of investor.
Not at all.
Our second choice was both, and we're very similar in the end, which has always been strange. Like all my life, I'm like, how did we get so close? But anyway, right. I ended up picking Facebook. So Facebook edged out Visa just by a slight margin. So Facebook has a market cap of $593 billion. And what that means is they have a heck of a lot of money to do research and development and do adjustments when things like this happen. Additionally, the PE, price to earnings ratio, is 30. Now, let me tell you about what I like the most about Facebook. Ticker symbol FB, and trading at $208.47. I don't know what they did in after-market trading yet, but yeah. Anyway, $208.47 was last trade. Facebook is trying to gear up to be competition for many of the webinar-based platforms out there. Now, many of you all know at one point, I think one of my picks was Zoom, I believe it was, and Facebook is about to go directly at them. Facebook, though, having a population like billions of users every day, capturing their images, their memories, they're now launching a platform that's going to allow you to do webinars. Now, that's one thing. Now, think about this. The company that you're already doing lives on, the company that you're also, all of your network is on or has access to or is aware of, you can run a webinar natively from this platform, and they're talking about giving the people the ability to charge for webinars, meaning that they're going to take some type of processing fee for that, I'm sure. And you can invite people who aren't on Facebook's platform. So all these people who aren't on Facebook's platform can come into your webinar, realize, oh, I would love to do this too. And one thing Facebook has been known for more than not is ease of use. It is not a terribly difficult platform to use. So when these people come in who maybe aren't native Facebook users, or they just weren't, really feeling Facebook, they're now thinking, oh, wow, this is a really easy platform. Let me use it too. And Facebook is taking advantage of COVID-19 and this quarantining. They're coming out with a platform called Facebook Dates. Facebook Dates is going to be a dating service where, you can do the swipe left, swipe right, all that. But the difference is you can actually go into you can find somebody that you like, send a connection, go into a private Facebook room and get to know the individual without them knowing your full name, having access to your profile or anything else. They just have your first name and whatever you put into Facebook Dates. That's going to be huge, especially when people can no longer get out and meet people. And there are a lot of single people who are quarantined right now. What that's going to do is going to create loyalty to Facebook. So similar to like a Costco, Costco has a 93% retention rate of people who get a membership card. That's ridiculous. I think Facebook is headed in that direction. Therefore, I pick Facebook. They're bringing Instagram into a desktop friendly ecosystem. And right now, Instagram is really mobile. If you're not using a mobile device, you really can't get the full functionality of IG. Instagram now will have a desktop friendly version because Facebook recognizes that there are a lot of users that they're missing by not having that feature. And when it hits, also you're going to be able to watch, I think it's IGTV as if it were a channel. So all these things are really strong reasons why I chose Facebook, and I think you guys should give some strong consideration.
Cool.
I gushed just now. I didn't mean to say that much.
Yeah, I don't think you've ever talked that long.
No, I'm so excited. But anyway,
that shows your passion about Facebook. I mean, think about it. We go live. I mean, up until we've had these recent issues with Facebook trying to stream because everybody's on it. We go live on Facebook. You go live on Facebook. I mean, use Facebook every day for your business. So I mean, it's a logical choice. And one thing about it, I don't know if a lot of people know, but Facebook gets most of their money from advertising. The three big players right now are Google, Facebook, and Amazon as far as online advertising, and they dominated. I mean, Google alone, I think is like 60%. The other 40% is roughly Facebook, between Facebook and IG. So I mean, Facebook is a no-brainer when we're talking about the internet and the future, especially as far as advertising.
Yeah. So guys, for today, that's it. Again, want to say if you are interested, we are coming soon. So I know it's hard to see it, but it essentially says Investing Education Academy is coming soon. We have already had people who have asked us about becoming members before it fully launches. So we are talking about a pre-membership platform or something where we offer like some discount for those who want to join the membership before it even comes. So we haven't figured it out. Complete transparency. So
it's still working through it.
Yeah, but it is coming. And if you all can continue to send us what you would like to see in the membership platform, you can send Leon a message. You can send me a message, Brent Simpson, Leon Noble, and just tell us what you want and put it into the Facebook group. Put it in the group, like guys.
Yeah, I prefer that. I prefer it. If anyone has questions for us, please post it in the group. And the reason that is that everyone in the group can benefit. So instead of us, because I mean, the reason we started this was to share all this with everyone that was asking us. Instead of doing one-offs, we said, let's just bring it all together so everyone can benefit. So yeah, if you have a question about a stock, unless it's something personal, that you want to ask us outside of kind of this, but if it's regarding investing and anything to do with the stock market, yeah, please post in the group. We're quick to follow with answers, and then other people in the group could also benefit from your question and from answers that I give or Brent gives or anyone else in the group gives. So yeah, definitely post questions in the group.
Yeah, I will say that too. It's a holding tank of information, and the more we put into that tank, the more it becomes full. So guys, if you can put everything into Investing Education Academy, the group, find us on Facebook, and that is really our repository of information. And that's where we're going to be launching into the membership platform from there. So, with that said, that's everything for us today. Leon, you have anything in closing?
No, I just want to say shout out to Vince for the question about Beyond Meat.
Yep. And for everybody who sends us messages and it's wishing us
not post messages.
Posting messages. It's wishing us happy 1 month. I don't know how some of you all knew that, but that's pretty cool. So but many more to come. Have a good day.